Hey everyone, welcome back to Crypto Cash. Thank you so much for joining me here. Happy Monday to you. Hope you're having a great day. Hard not to be excited about this blood red market here, mainly because I've been expecting Bitcoin to pull back for a little while, and it's kind of nice and actually very healthy for this continuation to the upside. People seem to think parabolic activity is just strictly straight up, but no, you can't have it without these corrections here. So this is good. We're going to talk about key level supports, resistances. We'll verify, we'll take a look at the weekly and the monthly too, and then also kind of understand where we're at here. I want to preface and kind of discuss just really quick my last analysis here on Saturday, just so you can kind of understand what I meant by this here. Simply to put, we had range bound activity between what, 68,000, 69, and then of course we got 67 to 68. There's these two ranges essentially. We're testing that lower range of 67 right now. Could lose it, could hold it. What I'm getting at here is that this is uncanny as to how liquidation levels are swept. Take a look at this here. $60 billion in liquidation. Price pushes up to 69.5, almost exact. Sweeps all this liquidation here, roughly 60 billion in liquidation, and essentially is pulling back now. Again, keep in mind, when I was talking about this on Saturday and Friday, the liquidation delta was way too high. We got a 6 billion liquidation delta there for longs, basically telling us there's way too many longs in the market leading into the weekend. Generally, you'll see a sell-off like that on a weekend. Instead, Asian markets come in to open their session here and pump the market on a Sunday night, okay? Everything else goes crazy. A lot of altcoins start surging. A bunch of people take late longs, and now look what happens. Goodbye. Just hit the old flush button there on the toilet. So again, this is standard trading 101. They do this all the time. You want to be mindful of it and aware of it. That's exactly why we look at the things that we do. Future reference 2. When it comes to liquidation, it's never a guarantee. As I expected the price to pull back on Saturday, it took until Sunday night, sometime in the middle of the night when most of us in the US were sleeping, in order for the market to dump and correct itself. Okay, so again, bit of a late bloomer there, you could say. So let's take a look at the liquidation levels now and kind of go from there. All right, so let's quickly look here. So this is Bitcoin. Let's refresh, get some fresh charts here. And what we want to look at first of all is 7 days on the left, 30 days on the right. These are basically liquidation levels here for the last 7 days. We can see there's very little left up above. As you can see, any late short got destroyed right here. Okay, those would be early shorts, right? And then of course the late shorts, there's only a few of them. They're the ones that really knew what's going on. They were awake during the trading session, and the price continued to pull back. The simple way to understand it is this is a standard manipulation strategies, right? We got all liquidation to the upside just taken care of. Now price is moving down to sweep any kind of longs here. So if people are taking longs at 67,000, I think that's probably a foolhardy idea based on liquidation alone. Again, we got to look at a lot of other things here, but it makes sense that 66,000 would be the next target, possibly even 66.5, just based on local areas. And once again, the lowest point of liquidation is at 64,500, which has been a very strong in the recent past. 64.5 was that common area of support and resistance until we broke free from it. We can highlight that here in a moment, but just to clarify, we can see some extra liquidation here, probably about 15 to 20 billion in liquidation, maybe round up a little bit more, like 30 billion, upwards of 70,000. Okay, so there's still some left there, but folks, that's a long ways away at this point, and we're going to need to get some good buying pressure in. But the truth is, with this delta here dropping really significant, we have now in the last 5 days, because this is a 5-day look back here on this chart, we have basically more longs that have removed themselves from the market than the shorts. In other words, we have a lot more shorts in the market now at this point. It's not a tremendous amount. It's only at 1 billion at this point, but it does imply that the momentum is shifting. Okay, so once we see the shift here, it's generally best practice to consider shorting into that now that we have more bears on track, and or the fact that there's less bulls trying to take longs right now. Okay, so again, that's generally what we want to look at for those things. We take a look here. We talked about this previously. The open interest leading into the weekend was 67,000. That's still present, but we have a lot more open interest at about 68.1, 68.4. So it tells us a lot of longs are underwater right now. Okay, so that's generally where we're at. Okay, so that's kind of the overall sense there, the back end data here. Let's take a look at the somewhat of a macro perspective here for the weekly and kind of work our way down. Okay, so go ahead and use this chart here. This has my macro fibs pulled up, and we can see that we did break free from our descending trend, right? So this type of flag pattern, however you want to label it, essentially was establishing lower highs, lower lows. We broke that. Okay. However, it's not a very strong start to the week. So if we don't close over 67.5 this week, that would pretty much be, invalidated, so to speak. Okay. So generally speaking, when it comes to breaking trend lines, both macro and micro, you want to wait for that retest to occur. And right now we are technically retesting 67,000, but it's coming down further, and I think we're going to see probably 66K just makes sense right now. Again, I'm just kind of spitballing here based on the overall sense of what we've looked at so far. Again, liquidation is a very powerful motivator. Take a look here. We can see that 50 on the RSI still holding. Stochastic RSI swinging up. Money flow index is tapering off. It's kind of below the RSI, not generally a great sign. And then of course MACD, while it's not strong, it's still converging. So majority of these signs are still very bullish. So please understand the macro, the weekly is looking very good here in the overall sense. We're also above the important 20 and 50-day SMA, right? So basically got a trend line kind of coming up here. As long as we maintain that, we're in pretty good shape, okay? So just something to kind of be mindful of. Let's take a look at the daily and work our way down, see what's going on. This is a nice, nasty candle here. As we can kind of see, if we look at this, just this local high, this is basically a daily candlestick closure. It aligns itself with that 0.618 FIB level, so the golden pocket essentially. So my speculation is 64.5 is that's a 0.618 FIB. Upwards of 66,000 should be the area of retracement and or pivot. If we continue to that level, we'll likely see a bounce there. Again, that's just a standard trading 101 stuff here. I know I've said that a few times here, but there's a lot of normal, consistent things that we're seeing here that are happening, right? The key takeaway here is that when you come to a resistance, you come down, you break through that resistance, the likelihood of retesting that level is quite high to A, fill fair value gaps, and to B, essentially retest that as a support. If we lose that, we have a different conversation altogether. But leading into that, we got to presume that level will be retested in the relative near future. Okay, that's generally the consensus there. Now I'll update our FIB levels and I'll post our playout charts if you'd like. Kind of get you all that more relevant information. It's all available here in our Twitter, Telegram, and Discord. But at this point here, again, these are macro FIB levels here, just pulled up from this local range from 74K roughly down as low as about 49.5. So in that range, we can see that 0.618 FIB level is that macro support. And again, so 66 to 64.5 seems like a very logical continuation / pullback here. Let's take a quick look at the see here. This is the daily time frame, but let's quickly identify a few things here. We did reject pretty soundly off 70 on the RSI, as I mentioned before, is typically resistance unless it's broken. We can see stochastic is swinging down, money flow index right there with it. These are all, I wouldn't say bearish by any stretch because we're still over every single moving average. So the trend is still pretty good, the overall trend. But we did lose our initial ascending trend. And if I recall correctly too, we're at a 9 leading into the weekend. So let's see, this is probably a little easier to see here. You can see, there we go. TD sequential basically telling us here that we're at a 9 plus 1. So we got a little extra greedy over the weekend, which is standard for weekends to either have a lot of fear or greed. And now at this point, the price is pulling back, basically just letting us know that we've hit our initial top. So generally speaking, most continuations are going to have 9s or 10s as far as how many consecutive candlesticks are getting larger. In this case, it takes the 4th previous candlestick and counts up from there. So once we hit that 9, you can expect an overextension, which is exactly why I didn't feel comfortable taking a long at 68,000. It just didn't make any sense. It feels weird to consider a long at that level. Anyways, that's a lot of these things kind of coming to a head there. So basically, from a momentum standpoint, it would make sense for the price to continue lower. But from an overall average price, we are still in good shape. I think 62 to 64,000 is a solid support range based on macro points of control at 63K. And then, of course, we got a lot of our SMAs hanging out down there too. So again, not by any stretch is Bitcoin out of the game here, okay, folks? Don't misunderstand that with one strong red candle. This is a normal continuation lower. The question is, how much lower is it going to go? And based on the charts here, I would say 64.5 to 66K seems probable. But let's look at this here really quick. We had this bullish rectangle that inevitably broke out to the upside. So again, price comes up here, breaks through, actually performed a similar bullish rectangle. But again, the more patterns you see stacking on top of each other, the less likely they are to continue. And then, of course, we got the price pulling back here. So just know that we got some pretty round numbers here for support and resistance. So 68K is a fairly round number there. You can see a lot of consistency here. where the price action bounced, basically broke through its resistance, bounced off that to come up to sweep that extra liquidation, comes back down, didn't even bother to retest its support though. There's just too much selling pressure here. Okay, so basically what that basically means for us is that there's not enough bulls in the market right now that wants to take a long. So if you see this delta here, really straightforward, letting us know that we have a lot more selling pressure, and or just simply put, a lot of long secured profits over the weekend, and they're no longer buying right now. They're just letting the price pull back. So there's a lot of reasons why the price should continue lower, but also may not. Let's talk about that. First of all, we got the 50-day SMA here, but we're soundly below the 20. So generally speaking, in an uptrend, you don't really trade into the 20-day SMA until it's broken. So at this point, obviously it moved really fast, hard to catch that kind of drop. But when you drop below the 20-day SMA on the 4-hour time frame, usually a sign of reversal. We can see here as well, we've lost 50 on the RSI, stochastic pulling back, MACD is diverging. We're hitting 0 on the trend strength indicator. There's a lot of reasons why we're probably going to continue a bit further here. I'd be willing to put a lot of money on the fact that we're probably underneath the Ichimoku cloud here on the hourly. And if you look here, look at this trend. This trend was really, really nice. Every time the price action tested this cloud, the price continued higher up. Okay, so every single time that happened. All right, so basically at this point, what we want to presume here is that the price will continue a little bit lower. And at this point here, if the price were to retest or come back up, it would be sensible to experience a resistance at about 68K if the price comes up to kind of rally back, if you will. All right. So I would expect somewhere in the 66 to 64.5 mark. That's just kind of a general consensus there. All right, so that's kind of what we got there. I'll update our playout chart here on Twitter, Telegram, and Discord. Get some new liquidation levels up there for you, and hopefully, just keep you abreast as much as possible. So I deeply appreciate all the support and awesome commentary for those who have been doing so, and just thanks again for always hitting that like button, getting this in front of more people. Appreciate you very much. Thanks again so much for your time, folks. Look forward to seeing the next one. Have a great rest of your day. Take care.